Hello and welcome to the next video in our series of mortgage-related Q&As with mortgage experts from across the state of Pennsylvania. Today we're going to be talking with Shane Whitteker. Shane is the owner and chief broker at Principal Home Mortgage. Today we're going to be speaking about FHA loan mortgages and asking Shane some questions that are frequently asked by people in the state of Pennsylvania who are considering an FHA loan mortgage to purchase a home. The first question that we have for Shane today is what exactly is an FHA loan? Shane, what's an FHA loan and what is the FHA exactly?
So the FHA is the Federal Housing Administration. One big mistake people make, or a common mistake, is referring to the FHA as a first-time homebuyer loan, but it's available to anyone. You don't have to be a first-time homebuyer to qualify for it. The FHA insures mortgages underwritten to FHA guidelines. So the FHA product is actually an insurance product. It's an insurance to the banks that lend the money. So it's not FHA is not actually a bank. It's not actually money that's lent. It's an insurance product, for the bank to basically underwrite to those guidelines, and it offers low down payment and high debt ratio. So it's an aggressive insurance product that really helps out the mortgage industry quite a bit.
Okay, all right. So in essence, it ends up being insurance for the bank that is lending the actual money.
Correct.
How would someone know if they're able to qualify for an FHA loan? Are there any tips that you can give as far as that's concerned?
FHA loans are typically easier to qualify for than other loan types. So, it's still based on credit, debt ratio, and down payment. They're definitely a little bit more forgiving in relation to credit and debt to income. So, it's basically the max debt ratio on an FHA is around 56%. The system has to give you an approval for you to qualify at that. And the minimum credit score for FHA is actually set by the bank. We have banks that'll go as low as 500, but the majority of people in that credit score category wouldn't qualify. So FHA also requires a higher down payment once you go below a 580 credit score. So most of the time people are 580 and above if they're qualifying for FHA. So that is a little bit easier. It's a little bit more lax, I would say, than say a conventional credit score requirement.
Is the down payment the same on an FHA loan as a conventional loan?
It's similar. The down payment is 3.5% on FHA, where your minimum down payment on conventional is 3%. But the FHA allows for a higher percentage of the closing costs to be paid for by the seller. So overall, you do end up with the potential for less money out of pocket with an FHA loan.
I see. Of course, like most of the things that we're discussing here, this is a case-by-case basis. No.
Yeah, it's absolutely case by case. What I tell people is, we can give you basic guidelines, but you definitely need to talk to a mortgage broker to figure out what you do qualify for, because they set the basic guidelines as far as credit score and as far as debt ratio and down payment, but there are a number of other factors that play into this, that we would review in a pre-qualification scenario, so that you as the client know exactly what you're getting into, make sure you do qualify, and if you don't qualify currently, we'll discuss with you what you need to change in order to qualify in the future.
I see. That's the advantage of a mortgage broker. What is the advantage of an FHA loan for someone as compared to a conventional loan?
So the FHA, they have the ability to offer less out-of-pocket expense. And the reason that I say that is because you can typically you can have, depending on your purchase price, but typically you can have all of the closing costs covered by the seller. Conventional, you don't actually usually get a high enough purchase price where the seller is able to cover all of your closing costs. Down payment is able to be gifted with FHA. FHA is a little bit more lax on their gift requirements for down payment. So it's just a more forgiving loan overall. and that really relates to the way that insurance program is structured to facilitate more home ownership for people with maybe a little bit lower income or less money down. It's a good aggressive product for the mortgage industry and for potential home buyers.
You had mentioned earlier that it's also it can be a better option for someone with a lower credit score.
That's true. We still have other factors we have to consider outside of credit score in relation to credit, as far as credit history. But your minimum credit score for a conventional loan set by the agencies is 620. Now, banks can set a higher credit score limit if they choose to. The banks we deal with are typically underwriting directly from agency guidelines, so we don't have what they call overlays for most of our mortgage products with our banks. So it is definitely a little bit easier to qualify for, and certainly more forgiving on credit history than a conventional loan would be.
Okay. Anything else, any additional tips that you would have for someone considering an FHA loan?
The FHA loan is a great loan for a first-time home buyer to start building their equity, simply because it's easier to qualify for. So if you don't qualify for conventional financing, you still have options. With the FHA, it's like I've said before, it's more forgiving. It allows a higher debt ratio. So really, it opens up home ownership to a group of people that may not qualify for conventional, which is it's a good thing, especially if you're interested in your financial future. Building equity is, it's one of the biggest ways that people save in relation to retirement. So that's, in my opinion, that's one of the biggest advantages of the program to our society. Buying sooner rather than later allows you to take advantage of home equity growth. And, there's been studies done that indicate that the average person has far more equity in their home by the time they're of retirement age than they actually have in a retirement asset like an IRA or a 401k.
All right. So if I'm interested in learning more, am I able to contact, you guys are the Pennsylvania mortgage experts. Can we contact you via phone or email? What's the best way to do that?
Phone or email. We're here to walk people through the process and educate them on, what their options are as far as loans go. As a mortgage broker, we don't charge anything up front. We get paid if a loan closes. So, our expertise is really free until we actually close a mortgage for you. All those costs are disclosed up front. Typically, the bank that we use pays the broker fee, so you don't have out-of-pocket expenses to the borrower or to the buyer. So email, phone call, go onto the website. You can apply on there, and there's a lot of information on the website. But you want to take it a little farther than just getting information off the website. It's a good idea to have somebody, in our profession look over your situation and be able to guide you through the process and help you plan accordingly.
Sure. Sounds good. All right. Well, we want to thank you, Shane, for sitting down with us.